Hey traders, welcome back to this week's weekly Forex forecast. We're going to be going through in today's video, of course, the setups that I'm going to be looking at personally trading next week in real time with GMT members. And we are currently at all-time highs in the real-time setups with GMT members. However, the last 5 to 10 trading days, in fact, the last 10 trading days have been quite difficult. Now, why is that? Because not last week, but the week before, we had this big volatility. Much greater than we normally see, and usually you need some kind of a catalyst to cause this. But in these weeks, even though they're kind of rare, few and far between, and we term them reversal weeks because they tend to reverse trends, for example, the market's moving up, then you get a catalyst, big volatility, and it reverses the trend. So we had this kind of reversal week, and in those weeks you tend to see breakout strategies outperform, and reversal strategies like the one I trade tends to underperform in those weeks. But then what happened last week, we kind of had the opposite, where we had that expansion of volatility with this reversal week. Last week, we had a contraction of volatility, and pretty much not that much was really moving. I mean, over here, for example, the difficulty was just timing any kind of reversal because of how steep the move was. But last week, the difficulty was just trying to come by markets that were actually moving, giving opportunities. Because last week, if you go back and look at the Forex pairs, about a third, roughly a third of all the majors and cross pairs have inside weeks. So they have an inside bar on the weekly candle. What that means is the entire trading week of data last week sits inside the week before it. So we don't breach the high or the low of the previous weekly candle. So what that means is that, like I said, you get that expansion and then that contraction of volatility. So going into this week, we ask ourselves the question, why do we have that kind of contraction of volatility last week? Well, if you have an expansion of volatility, you do tend to see that. But also we have CPI coming out of the US, and that might be why we saw less money coming into markets last week, because US CPI can really, and especially over the last year or so, has really been a market mover. So pay attention to that on Tuesday. I am going to be looking at the dollar pairs in today's video and also next week, but I'm going to be looking at trading them from Tuesday onwards. So I would like for CPI to come out on Tuesday, and what I'm going to be looking for is a potential short in euro dollar. Now, when we go through the portfolio selection, you'll see that actually I'm interested in being long the euro and the US dollar versus other currencies coming into this week. But in terms of euro dollar as a pair, I am looking on balance only for shorts. So what I'd like to see is I'd like to see post CPI, maybe if we get a little bit of a soft print, nothing too crazy, but a neutral to soft print, and we start to see the US dollar weakening a bit. Then what I would like to see is as euro dollar pushes up, that third test of the channel. So we've got a high, low, lower low. This would be that third test. And what I like about this is as we trade above the 1.17702, if we can trade into the sell zone next week, then we also trade into a really nice 4-hour support. It's actually right at the top of this volatile move. Very often markets do pull back, retest the highs and lows of very volatile moves like this. You see that with the Swiss franc peg being removed, for example, sold off and then came all the way back and retested the high. So this is the setup I'm going to be personally looking at trading next week in real time with GMT members. A test of the channel to push through, and then a failed breakout above the 1.17701. I'm going to look for euro dollar to come back in. Now, if you get a really bearish catalyst, so let's say CPI comes out and it's super soft, you could see this just explode straight through. So when you have news events, you have to use a little bit of discretion. If it's really bearish for the dollar, then maybe I'm going to wait and see how the market reacts at this level. If it just goes straight through like a hot knife through butter, then I would wait for the pullback and look for a short at the second upper bound. But that is really the primary thing I'm looking at next week, assuming we don't get a super bearish catalyst for the US dollar out of the CPI report on Tuesday. So the third and final thing you can look for is, of course, if you get a bullish outcome for the dollar on CPI. So we're looking at this reactively. We're not trying to predict CPI. We're just looking at this kind of three ways. If we get a kind of neutral outcome, how can we play it? If we get a really bearish outcome, how can we play it? Potentially wait, look for the second upper bound up here. If we get a really bullish outcome for the dollar, how can we play it? Well, very often in that scenario, you just get a break straight down the moving average follows it, and then you get that kind of bear flag setup, follow through. Profit taking target to the downside in that scenario next week is the 1.15100. So on balance, I prefer shorts in euro dollar, but I am interested, as we're going to see as we go through the video, in euro and US dollar longs versus other currencies next week. Okay, so moving on to the portfolio selection, and the first thing that jumps out to me quantitatively here is the lack of any clear, outstanding performance to the upside or the downside that we should be looking at going into next week. Well, that really tells me when you see pretty much everything kind of neutral, that, often you see that at a kind of inflection point in the market. So it really adds weight quantitatively to this idea that the dollar is forming a more significant bottom, and the euro dollar pair is probably at or near a significant high. Now, I wouldn't be totally surprised we're seeing euro dollar do this, aren't we? Kind of looking for that third test of the channel. If, you got a kind of favorable CPI report for the euro, in other words, a weak or a soft CPI report, you could see, euro dollar breaking through, towards the upper bound, testing the highs again. But even if it does that, I still think overall, it's probably going to fail to really break through, and we're at that kind of significant top in the euro. So going into next week, I do favor euro long still, relatively speaking, even if we are potentially approaching a near-term top in euro dollar as a pair. I do also favor the US dollar to the long side. We'll be looking at those primarily after CPI next week. And also the Aussie to the upside is my third currency that I'm going to be looking at next week. Now we have the RBA on Tuesday, so just bear in mind, I'm personally going to be, looking at trading the Aussie pairs after Tuesday. And in fact, I expect most of the opportunities next week to start coming in from Tuesday onwards. Why? Because we've got RBA in the morning, and then we've got US CPI in the afternoon on Tuesday. And after that, coming into Wednesday, Thursday, Friday, I think we're going to see most of the action next week. So those are the three currencies I'm looking at to the long side. I have been long the Swiss franc for a while. It's been a really good long. Last week, kind of underperformed. And it's the first time this week, I'm kind of looking at the Swiss franc, and it's not high up on my list of long opportunities. So, your longer currency, long currency, looking to buy the dip, buy the dip, buy the dip. And then you get a week where it kind of reverses or underperforms, and then it can kind of chop around and lack direction until, starts to get back up on the leaderboard again. So going into this week, for the first time in a long time, not as interested in Swiss franc longs. And to the short side, definitely the New Zealand dollar, also the pound. Now, quantitatively, we should still be looking at shorting the pound based on what we're looking at here. And last week, we had a rate cut out of the pound, but we saw the pound push higher. Now, I was also looking at shorting pounds last week. Pound shorts didn't work great last week, but I do think that the pound is probably on balance going to roll over. And especially when we go and put that idea technically onto pound dollar, you will see we're right at an area in pound dollar where we could get a significant decline. So I do still favor, for now, pound shorts going into this week, despite that push higher last week. And, the other thing is with the pound, it was a bullish catalyst in the sense we had a kind of unexpected vote where more members of the MPC voted to keep rates unchanged. There was an anticipation that more of them were going to vote to cut. So that's what kind of caused, even though we got the rate cut, it kind of caused a near-term push up in the pound. But how bullish is that really for the pound? They're cutting rates and the economy's kind of slowing, but there were less members than expected, voting to cut. Well, it is on balance bullish, but it's not super bullish. It's not like they're going to have to hike rates again anytime soon. It's just the number of people voting for a cut was less than expected. So bullish catalyst, but not something I really see, turning the pound into one of the strongest currencies. So I do still favor pound shorts going into next week. That means the third short I can look for is either the yen, the Swiss franc, or the Canadian dollar. Now, out of those, I'm going to go with the Canadian dollar because the Japanese yen and the Swiss franc are safe haven currencies, and we are seeing the VIX picking up, and we're starting to see stocks, at risk of pulling back, although I don't see anything super bearish as it currently stands in stocks. I do think we could get a correction, but stocks generally are still fairly bullish. But as it currently stands, if we are going to get volatility increasing in the US and equities pull back a bit, this would favor the yen and the franc over the CAD. So for that reason, I like the Canadian dollar as a third short next week. Plus, we're seeing crude oil coming down and potential talk about a ceasefire between Ukraine and Russia. Whether it materializes, I don't know. But if it does, that's going to be bearish for crude oil. And also, that's going to put downward pressure on the Canadian dollar because, you know, as crude oil sells off, the Canadian dollar gets downward pressure on the currency. So for a number of reasons, it is the Canadian dollar that I prefer to the short side. So we're going to be looking at Euro New Zealand to the upside. We're going to be looking at Euro Pound to the upside in today's video, EurCad to the upside. Going to also be looking at New Zealand dollar to the downside, pound dollar to the downside, which is really in a point, as I said, where we could see a big sell-off next week, probably dependent on US CPI. And then also, I'm going to be looking at US dollar CAD to the upside. And finally, we're going to be looking at Aussie New Zealand to the upside, Pound Aussie to the downside, and Aussie CAD to the upside after the RBA. And I'll show you how I'm going to be looking at trading those post RBA. Okay, so kicking off the watch list, as always, with crude oil. Now, we talked about the fact that Ukraine and Russia are kind of floating the idea of a ceasefire. Ukraine doesn't sound too pleased about it, and they don't sound like they're jumping at the opportunity because it requires giving up concessions and Russia being able to advance past the defensive lines that Ukraine have built, you know, if they concede that territory, etc., etc. So there's no foregone conclusion that, you know, an agreement will be reached. However, if there isn't an agreement reached, then nothing really changes. If there is an agreement reached, that could be bearish for crude oil. So on balance, I do favor crude oil based on the fact that we are starting to trend down technically, and we have a potential bearish catalyst on the horizon, potentially. So what I'd like to see either way is if we can pull back in crude oil, and usually I'm looking for a number of things. I'm looking for a market to turn overbought by trading, you know, in this case, in the sell zone. And I'm looking for confluence. So once we get into that area, once we get into this zone where I start to look for shorts, where are we going to see confluence with horizontal levels, you know, descending, ascending channels? I prefer horizontal levels first and foremost. They're my primary go-to. And then, you know, if we can also find confluence with descending trend lines or ascending trend lines, then I'll add those in as well. And you can see quite clearly there's an intersection right here between a prior high and this kind of downward sloping channel, which can be drawn on because we've got a lower low now. And so if we see crude oil pulling back, first and foremost, it needs to trade above the 66.97 for me to really become interested. But if we start to push into this area, this is where I'm going to be looking next week for a potential short opportunity in crude oil. The point at which we turn extremely overbought is the 70.60. I don't expect this level to be taken out next week. If it is taken out, it's usually because there's some kind of unexpected catalyst. Otherwise, these gold levels tend not to be taken out. And so if we trade above there, that is the second place I can pull the trigger on a short if I'm already short or not. And the third and final thing, you know, again, breakout strategies tend to work better in commodities because they're more volatile asset class than Forex. But it is quite choppy at the moment. So, you know, that kind of intra-week breakout where it kind of breaks back down below the moving average, not sure the conditions are quite there yet, you know, for those to be really good setups. But if that's your thing, you can look at it. But this is the primary setup next week I'm looking at, which is a trade into the 67.64. And I'm going to be looking for a failed breakout and a 1 or 2 day liquidation back inside the range of crude oil. Okay, so kicking off the Forex universe with the Euro pairs, starting with Euro New Zealand. I can only be a buyer of Euro New Zealand next week or do nothing. I cannot sell this market next week. So what I want to see is I want to see Euro New Zealand pull back. And again, we've got this kind of channel bottom, which is actually really nice. And it sits a prior support level here, which we kind of tested, attempted to break through and failed at. It sits right in the same area. So if we can break below the 1.9374, and it may pop outside of the ascending channel, you know, it doesn't necessarily have to respect the ascending channel to a pip. It may breach here, you know, kind of pop out the bottom and then trade into the 1.93520. So just as over here, we failed to break through this low, that would be the low next week in the buy zone. So the place at which we turn oversold during the week and therefore increases the odds of it snapping back regardless of whether we have any confluence here or not. But if we trade into the bottom of the channel, start to break through and test this prior support, the 1.93527, that is where I'm going to be primarily interested in looking for a 1 or 2 day reversal to the upside. So just as we're looking for that kind of channel top in crude oil with a nice kind of confluence with the horizontal level, so too we kind of have this on the opposite side. And bear in mind, when we go through the markets, you know, these are not predictions that I'm predicting to take place. They're setups that I'm going to be looking for. So I'm going to be sitting, waiting. We've already done the planning. So when it comes to, you know, Monday, Tuesday, Wednesday, there's nothing to think about. You know, I'm already looking and just waiting to see if the setups that we're covering in the Saturday videos and with other markets as well with members, if they just materialize. Do we trade into this level in Euro New Zealand? If we do, then I'll pull the trigger. You've probably heard that kind of if-then thought process, you know, with trading. So basically being reactive, you know, I call it being reactive rather than being predictive, but many will call it an if-then process. So if this happens, then I will do X. So this is what I'm looking for next week. The place at which we turn extremely oversold is the 1.91996. I don't expect it to come down here. If it does, I can also buy it from below that level. And the third and final thing is you can look for that potential breakout intra-week, because this is a strong market trending up back above the moving average for the bull flag setup. Profit taking target next week is 1.97249. Okay, the next pair we're going to look at is Euro Pound. Now, on balance, I do favor long positions in Euro Pound. Again, we're seeing the VIX kind of picking up, which is suggestive of at least a little bit of a pullback, you know, in stocks, even though overall stocks are pretty bullish. And so if we do get that, Euro Pound risk off is actually to the upside. We actually have a failed high over here. So we make a high, we fail to make a high. So that means this is probably either an ABC, where we start to bounce up, or, you know, that kind of 1, 2, and then it can turn into a third wave. On balance, because of everything we're looking at and the fact the euro is still strong and the pound is not, as it currently stands, quantitatively super bullish, I would go with the potential ABC. So what I'd like to see is I'd like to see Euro Pound come down next week. If we can trade below the 0.8592, then I'm interested in looking at this. And the next key area of support, which is a 4-hour support, sits here at 0.8577. So essentially what I'll be looking for is sellers to trade into here, attempt to break out below this level in a place where the market is already overextended to the downside next week. And as they pull their positions or get trapped, that is where you can get a liquidation for 1 or 2 days in the opposite direction. That's the exact setup I'm looking at day in, day out with GMT members. And so what I would like to see is I would like to see this coming into the buy zone next week and then looking for sellers to get trapped below the 0.8577. We turn extremely oversold during the week at the 0.85322. Don't expect it to take this level out, but it's worth putting on your chart just for reference. In fact, if we did take this out next week, that would be abnormal momentum to the downside, and that would then point more likely we've got a third wave coming into this market than an ABC, right? Because we've broken through the prior low with abnormal momentum. So that would actually indicate potential third wave as opposed to an ABC and then a bounce higher. So that's what I'm going to be looking at next week. If we come down, maybe we bounce off this low, you know, we get that ABC. Don't take out the lower bound. You could look for that break back above the moving average and that kind of bull flag setup into the profit taking zone, in this case at the 0.87145. And the final pair next week is EurCad that I'm interested in. I'd like to see EurCad come down. If we can trade below the 1.58778, and remember, not all of these will set up. So we're planning and then we're waiting to see which ones do set up. And I'm looking to capture really 1 to 3 good moves in a week. That's pretty much, you know, what I'm looking for. Some weeks it can be more, you can get 4 or 5, you know, or 6. But generally speaking, you know, in a slow week, I'd be looking to capture maybe 1 really good reversal out of everything I'm looking at. In a good to kind of average week, 2, 3 bigger winners clear. You know, that could be maybe, you know, you take 4 or 5 trades and 2 of them are bigger winners, you know, 2 scratch trades or whatever. But 1 to 3 is a really good rule of thumb for what you should be expecting, pretty much regardless of your strategy. I mean, if you're day trading stocks and you like to trade small caps or micro caps, generally speaking, you're going to get 1 to 3 really good ones a day. So it's exactly the same in Forex. You know, if you're trading Forex and you're taking a weekly time horizon, you should really, as a rule of thumb, be expecting 1 to 3 fantastic opportunities in that week. That's really a kind of baseline rule of thumb across asset classes and strategies and, you know, within the given time horizon. The rule of thumb is roughly 1 to 3 really fantastic opportunities, regardless of your strategy, within your selected time horizon. So if you trade every day or day trade, then it'd be 1 to 3 per day. And if you're trading on a weekly time horizon like I do, I'm looking for 1 to 3 really good opportunities net per week. So if we can break down below the 1.58778, this is where I'm going to be looking, and you can see in the 4-hour chart, I've got this low over here because we broke down and we created a low. So if we pull back and test this, this has the potential to become a right shoulder. And then you have this kind of upward sloping kind of head and shoulders. It's not textbook because this is quite shallow and this is quite big, but actually, if we do come down, test this prior low, you get the low, the breakthrough, the pullback, and the test of this low. That is where you can see the head and shoulders reversal. So that's where I'm going to be looking next week for a 1 or 2 day reversal to the upside. If we can trade below the 1.58778 in the buy zone, that's where I'm going to look for sellers to get trapped. The point at which we turn extremely oversold is the 1.57469. Don't expect this to be taken out unless we've got some kind of unexpected catalyst. But it is also a place you could look for a reversal. Reversals from below these levels happen very often as well. And also, you get a breakdown below and you get that re-break back above the moving average. That's where you can look for that bull flag setup into the profit taking zone if that's your thing next week at the 1.61396. Okay, so moving on to the US dollar pairs, started with New Zealand dollar. Now I can either be short this market or do nothing next week. Buying this market is not an option for me. And just remember, we have that US CPI on Tuesday. So I'm going to be primarily looking at the dollar pairs from Tuesday onwards. So what I want to see is either a kind of neutral outcome where, we get the kind of expected release, or what I want to see is New Zealand dollar pushing up, which would be a bearish outcome for the US dollar, so a softer CPI print. Because what I'm looking at here is I'm looking at New Zealand dollar pushing higher. We do have a down channel now. We're making lower lows over here and also a lower high. And we have a really nice 4-hour high over here in the sell zone. So yes, and this is one of the things with ascending, descending trend lines, you can easily pop through them and then reverse, and then the trend line kind of gets adjusted. That's why I prefer horizontal lines. One of the reasons they're more objective, less subjective. But what I'd like to see is this push through, breach the 0.60254 and attempt to trade through this high, because that is where I'm going to be looking for buyers to get trapped next week and for this to sell off back inside the range. And then you can end up, with something like this, pulls back, test the underside. And then when it takes this low, if it goes down like this, then this gets adjusted, from these highs, and you get a new kind of downward sloping trend line. So I'm looking for the break above the 0.60339 next week, which is this high right here. And that's where I'm going to be looking for buyers to get trapped. If we're just moving higher and on Tuesday, we get a bullish outcome for the US dollar, then the setup you can look for is that break down below the moving average, which is kind of like a dynamic trend line. Notice how, we're kind of channeling down and this pushes up and it acts as almost like a counter trend line. Break below it and then we break back above it, and then you get the counter trend line break. Market consolidates and then the sell off into the profit taking target next week at 0.58829. Maybe you could target the bottom of the channel, but it's quite deep in the buy zone next week. So to me, that's quite an ambitious profit target. The more conservative profit target, for shorts with roughly a 70% expectancy is the 0.58829. So that's what I'm going to be looking for next week primarily. If we end up, for whatever reason, we get a super bearish, that would pretty much be the only reason, a super bearish outcome for the US dollar, and we take out the 0.60967. This is where we turn extremely overbought during the week, and also where we're likely to reverse in that scenario. If we break through there and take out this high, now we've started a new trend to the upside. And so again, that's why you kind of need catalysts to reverse trends, because without them, trends just kind of keep rolling and rolling. Then you get a big kind of reversal and catalyst, and then that trend tends to just keep rolling and rolling as well. So that's the opportunity I'm looking at next week in New Zealand dollar. I can either be short or do nothing, regardless of CPI next week. Okay, so moving on to pound dollar. Now, pound dollar is channeling lower. And I said at the beginning of the video, pound dollar is really in a position where it could sell off right from where we're at, especially if we get, and probably will do, if we get a stronger than expected CPI print. So there's two things to pay attention to here. You'll notice that in order to get to the upper bound, we have to break through this channel. So if we get up there, I will consider a short. However, this could very much go from the top of the channel here. Why? Because A, we got CPI on Tuesday, which means this will probably do nothing and then move on the actual CPI event. And the other thing is last week, which is a setup that we look at and trade in real time with members, is what we call Monday, Tuesday reversal setup. So very often what you'll see is pound dollar, for example, last week came up, took out the weekly upper bound and didn't reverse last week. So that's where I'm looking for a breach of the weekly upper bound and then a reversal within the week. When markets breach their weekly upper or lower bounds and they do not reverse that week, like pound dollar, very often, although again, the caveat here would be CPI, because if you get a weaker than expected CPI print, this could very easily just break straight through to the weekly upper bound again. But assuming we get a kind of neutral or bullish outcome for the US dollar, that would fit very perfectly with a Monday, Tuesday reversal setup where we traded into the weekly upper bound last week, and then we get the reversal instead of during that week, the following Monday or Tuesday. So that's likely to happen off CPI. So if you do get that, just bear in mind, a hotter CPI print, you probably start to see this break down, and then the follow through trade would be into the weekly lower bound at the 1.3320. Now, if we get in this scenario, if we get a bearish outcome, a very bearish outcome for the US dollar, or for whatever reason, the reaction from CPI is for pound dollar to break out of the channel, then we start to trade into the weekly upper bound again. And this high right here is where post CPI, in the event we start to break up, this is the high right here. I would be looking in the new sell zone this week for a potential 1 or 2 day reversal to the downside. And in this case, you could very easily see this coming back down, testing the top of the channel here. So I don't expect it to come all the way down, test the top of the channel next week, but certainly if we breach the 1.35802 with a softer CPI print on Tuesday, then this is the high I'm going to be looking for a failed breakout on next week and looking for that 1 or 2 day reversal. So the final thing then is the 1.37103 is where we turn extremely overbought during the week, worth having on your chart. With CPI, we could get there, but we'd need a very bearish catalyst for the dollar. And if we take this out, especially if we take this out and push through to this high, what does that mean? It means we have actually started a brand new trend to the upside, and this would actually end up being an ABC with a new high like this. So don't expect this to happen. You'd have to get a very bearish print on CPI. Overall, this would be my preferred setup if we can get it next week above this high. Next is US dollar CAD. Now, US dollar CAD is also kind of channeling again because we've got this low and a higher low, and now we've got a high up here as well. So we can put this channel on here. What I'd personally like to see is, because I don't think we're going to come all the way down to the bottom of the channel, what I would like to see though is I'd like to see US dollar CAD coming down, turning over sold during the week, which is where we enter the buy zone. So that's below the 1.36684. This is where I personally will get an alert in Hedge Dash to say you need to start looking, at this market. And this daily support level over here, we're looking at the 4-hour chart, but this is a daily support. This is where I would start to look for that potential right shoulder. So we come down, test the 1.36470. This is where I'm going to be looking for sellers to get trapped. And that's where I'm going to be looking for a 1 or 2 day reversal. If we start to break out intra-week on the CPI print, so we get a bullish outcome, so a stronger than expected CPI print, that's where you get your intra-week breakout. Moving average follows it. You can look for the post-CPI follow-through trade. What I like about this is, I've put this top channel on because it sits right at the sell zone next week, which if you're buying is a profit-taking zone, right? So right into the profit-taking zone and the upside of the channel, pretty much around the 1.3850 area. So really good profit target for any post CPI longs in US dollar CAD. The 1.35798 is worth having on your chart. It is where we turn extremely oversold during the week, but not expected to get there unless you've got a very bearish catalyst for the dollar, which could come on CPI, but that's really the only thing that could drive this down to that gold level next week. Okay, so wrapping up the Forex universe with the Aussie pairs before we move on to gold and silver. Now, what I want to see is after the RBA on Tuesday is when I'll be trading the Aussie pairs. I want to see Aussie New Zealand selling off. So that's going to be a bearish outcome or a neutral outcome from the RBA. If we get that, I'm going to be looking for a breach of the 1.0902. And here is a very well-defined daily support level at the 1.08826. We've already attempted over here to break it and failed. And I'd be looking once again for a failure below the 1.08826 for a 1 or 2 day reversal to the upside. So that's what I'm going to be looking at next week. If we just chop sideways and we get a bullish outcome from the RBA, then you can look for the pullback into the moving average. That gives you your bull flag setup. Profit taking target to 1.1016. And if we get a really bearish sell-off, it could push Aussie New Zealand all the way down to the 1.08450, which is where we turn extremely oversold during the week. And, you know, in that scenario, maybe I would just filter the first buying opportunity, right? If we get, you know, more rate cuts than expected, or we get a really bearish outcome, you can just kind of see how it reacts at this level. If it goes straight through, or if it blasts straight through, then you can wait. And, you know, if we're trading to the gold level, then you can take your initial position. Next is Pound Aussie. I can either be short or do nothing. Buying this market, regardless of the RBA, is not an option for me next week. So the primary setup I'm looking for is for this market to enter the sell zone above the 2.07949, trade into this high right here, which sits at the 2.0850. And this is where I'm going to be looking for a failed breakout to the upside. And of course, if it's a failed breakout to the upside, it's a liquidation to the downside. And I'm going to be looking for that 1 or 2 day reversal back inside the range. That would be if we get a neutral or slightly bearish outcome from the RBA. If we get a really bearish outcome, you know, more rate cuts than expected or something like this, and we blast straight through, then the second upper bound is where I'd be looking for potential first position. But assume we get a kind of neutral or slightly bearish outcome, that's the primary setup that I'm going to be looking at next week in this pair. Of course, if we get a really bullish outcome and the opposite happens, so if we get the RBA taking place and the Aussie rallies hard, then you can look for that pullback into the moving average and the follow through into the prior low and also the profit taking zone next week at the 2.04223. And the final Aussie pair is AudCad. Now, this is not one of my favorite setups. It's actually quite low down on my list. However, if we can get a neutral or slightly bearish outcome next week from the RBA, the setup I'm going to be looking for is this: a breach of the 0.88920 and a trade into these lows here. This is where I will consider a 1 or 2 day reversal to the upside in AudCad next week. You can see it's quite choppy, so honestly, I would probably leave the intra-week trade. I wouldn't bother looking for an intra-week trade in this one. If you get a strong RBA, or you get the RBA taking place and a strong outcome from the Aussie, then I would much rather go and trade the other Aussie pairs, you know, like short pound Aussie. So I would leave the intra-week stuff. This is really the only setup I'm interested in. And if we got a really bearish outcome from the RBA, and this started selling off really hard, you know, more rate cuts than expected, then I would probably leave this altogether. I wouldn't bother buying this from down below the gold level. I would again rather trade the other Aussie pairs. So this is really the only setup I'm interested in AudCad after the RBA next week. Okay, so wrapping up the video with gold and silver. Now, on balance, I would like to be a buyer of gold next week. And what I want to see is I want to see it trade below the 3316.27. And if we trade below the 3316.27, this is where we enter the buy zone. And the prior low would be a great place to start to look for sellers to get trapped, pull their positions, looking for that 1 or 2 day liquidation back inside the range next week. The other thing you can look for is if we get CPI coming out and CPI on Tuesday is softer than expected and we see the dollar selling off, that's when you can get your intra-week breakout in gold. You know, the dollar sells off, the gold price breaks back above the moving average, because gold, you know, to the upside will tend to outperform with the dollar going down. Yes, gold can go up at the same time as the dollar, but it's a headwind. You know, gold tends to struggle to go up even if it does grind higher when the dollar goes up. When the dollar sells off, that's when you can get the really explosive moves in gold. So that would be the post CPI opportunity you can look at in gold if you get a weaker dollar. But this is the primary setup I'll be looking at next week in gold. And last but not least, we have silver. I still am only interested in being a buyer in silver. We came down previously, tested the weekly lower bound over here, and we had a really nice bounce and reversal from the weekly lower bound previously. I did get something out of it, not a huge amount. I actually cut this position a little bit early down here, but there's a really nice rally over here from the weekly lower bound. So the reason I'm mentioning that is because if we come down again, breach the weekly lower bound this week at 36.49 and trade into these lows, there's 1, 2 really nice lows next to each other. This is where I'm going to be looking to buy the dip in silver. And again, I'm going to be looking for a 1 or 2 day reversal back inside the range. And that is the primary opportunity I'm going to be looking at next week in silver. So if this materializes, then I'm going to be looking at pulling the trigger in silver to the upside. Again, CPI on Tuesday, it does mean that you might find this just ranges into Tuesday. And if you get a bearish outcome from the dollar, then you can look for the rally in silver, moving average to follow it, and that post-CPI kind of bull flag opportunity. Profit taking target is the 40.17. But next week, I can only buy silver. I cannot sell silver under any circumstance. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets, as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge- platform is included with every GMT membership.